Hello and welcome back to Nolan Financial Radio. My name is Chris McKinney from Nolan Financial Partners. If you'd like more information about what you hear during our show today, call 719-210-4242. You'll speak with a licensed agent or visit us online at nolanfinancialpartners.com. While at our website, click on the radio page, check out our past shows, subscribe to our program on Apple Podcasts, Spotify, Google Podcasts, or Amazon Music. While we're in the midst of the summer, well, toward the end of the summer, kids across the country are probably already thinking about that first day of school. They may already be there. So remember those first days of school? One hand, you're sad that summer is gone, but the other hand, you're excited to see your friends get back to that stuff that you were doing with all those friends. One thing you probably didn't give a lot of thought to in those days was homework. So here we're going to talk about homework. Retirement is a lot like homework. It cannot always be a lot of fun.
Right. That's for sure.
So one of the most essential pieces of retirement homework is understanding long-term care. A lot of retirees will eventually need help with even basic daily tasks like bathing, getting dressed, eating, a lot more stuff. But those services come with a price tag. For some, long-term care insurance may help provide the services you need without eating up a large percentage of your nest egg. During today's show, we're going to look at some of the key things you should know about long-term care insurance. But before we start our topic, let me introduce you to my co-host, Tony Shore, who I'm sure always turned in his homework on time.
Not even close, Chris. That is off base. I heard this a lot. You have such potential. If only you would apply yourself. I heard that a lot in junior high and high school, but I did excel in certain areas. I was great in English, creative writing.
Those are my
I was the editor of my high school newspaper, band, loved those. Math and science, not so much.
I'm totally a STEM guy. Yeah.
Yep, exactly. So, but that's great. And, I wish I was the person who always turned my homework in a day early to get the extra credit questions answered and all that. But I love this topic. And you've talked on previous shows about healthcare and how expensive it gets, especially as we age. And, it's one of the biggest expenses people are going to have in retirement. The big three that people, and these are three areas people don't think about in retirement is taxes, healthcare, and home ownership costs, or those types of costs, home living, right?
Yeah, that's right. A lot of people underestimate their home costs after they pay off their mortgage. They don't really gather, okay, there's all these things, all these other things still have to be paid that were part of your mortgage payment. So you got to make sure you account for those.
Right. But long-term care, I'm glad we're talking about this because that could be by far the biggest single expense you ever have in retirement. It can cost up to $12,000 a month here where I'm at.
Oh, wow.
So,
I haven't looked at the recent statistics for here in Colorado, but
it starts at $6,000 a month here.
Yeah, baseline is about $7,000 here, I think.
Yeah, baseline here in smaller towns is $6,000. I think.
Yeah.
In the Minneapolis-St. Paul area, it's probably a little more, $7,000 or $8,000. But then if you go to a private facility that's not a state-run facility, and you need memory care or full-time long-term care, that like at the nice new facilities, we have one here in Stillwater, Minnesota. It's beautiful. But if you're in the memory care unit, it's $12,000 a month.
Wow. Well, and that's what's happening with more people. Their bodies are living longer, but their minds aren't, right?
Yeah, that's the sad truth of this. But I think long-term care costs are becoming a crisis for people in this country. I mean, basically, farms and businesses and land and homes that have been in families since the 1800s are having to be sold because of long-term care costs to help pay for long-term care. And that's just, in my opinion, that's not right. But there are things people can do to prepare, right? So we're going to talk about
Yeah,
that.
we're going to talk about those things. So one of the main things that jumped out at me was there was a federal study that said that 70% Americans who get past their 65th birthday will need some type of long-term care services during their retirement.
Wow,
That's
basically two out of every three people.
2 out of every 3 people. So if you're sitting next to 2 people, the 2 people on either side of you are going to need long-term care. It won't be you, of course.
Oh yeah, it'll never be you. Yeah, that's the problem. Everybody out there listening is like, okay, so which 2 people do I know that
Right.
it's never me. I'm not even aging, Chris. So I don't have to worry about that.
Well, that study also found that now a lot of people will be able to stay with family, right? So they won't need paid care. But half of the people, half of retirees will. So that's a lot. So now it's 1 out of
Yeah.
2 is probably going to need that, and it always depends on your situation with your family and if somebody can do that, right? And then the other statistic was about a quarter will need 2 years of paid care. So that's at least somebody coming to your house. So that's 2 years, and that's expensive. And then
Oh,
15% will live more than 2 years in a nursing home. So now we're talking that $6,000 to $12,000 a month.
yeah. My mom has
Gosh.
Parkinson's, as you know,
Yeah,
and she's in her second year in a full-time care facility.
right. And really, there's no, you know, we don't want to plan for mortality, but it's like, okay, we don't know how long this is going to last. How do we pay for this?
Yeah. Yeah, exactly. Those are some stark numbers. So, yeah, we already mentioned this, but talk about the costs and the expense of this a little bit.
Yeah, so it really depends, kind of where you live, like we were saying,
Yep.
then how you pay for the services. Are you doing in-home care? Are you doing care outside of the home? Do you need skilled care or do you just need a babysitter, right? You know, now Medicare does not cover long-term care costs beyond when you've been immediately injured or have been hospitalized for something, right? So there's pretty much a
Yeah.
90 days of care, and after that,
And that's
then you're
only in certain circumstances.
only in certain circumstances.
You have to have
That's
been
right.
hospitalized for something, and
That's
it
right.
has to be approved. And so Medicare does not cover long-term care. I'm glad you said
No.
that because that's a misconception I had,
Yeah,
and that's a
you're
misconception.
not alone.
Initially, I know that now after working with you and doing these shows, um, but so many people out there think, well, once I'm 65, Medicare will take care of it. They won't. There
No.
are other things Medicare doesn't take care of either, like hearing, vision, dental, and long-term care. And those are the big 4 that everyone in retirement's going to need help with.
That's
So
right.
you have to prepare for that somehow.
Yeah.
Um, but
It
Medicaid could be an option for some people, right?
y Yeah, so Medicaid is a joint federal and state program. So the federal part kinda funds it, and then the state also funds it, and the state administers it. So, but however, this is for low income people. So you have to become low income before your Medicaid can kick in. Um, However, it is one of the biggest long-term care's funding source
Sure.
for pretty much, that's who's paying for most long-term care is Medicaid.
Because it's
Um,
so expensive that people spend down, no matter how much you have saved, at $10,000 a month, let's say, for example,
yeah,
you're going to spend down whatever you have saved pretty quickly, and
you're
then the
yep,
state's going to have to kick in and cover it. I think, and some states, like I think Minnesota is like $2,000. You only get to keep. You have to spend down to $2,000 You can keep a home and one vehicle, and then beyond that, you can't have any assets.
Nope.
And then the Medicaid will kick in once you hit that point, and
Right.
they'll cover everything for long-term care at that point.
Right.
But
And that's
uh,
pretty much the federal standard. And so that's how most of the states have gone,
yeah,
what you're talking about.
yeah. Yeah, exactly. But I will note that not all those fancy private facilities that are 12 grand a month
Oh, no.
accept Medicaid. Those big private facilities, they want the people with cash. That's where people spend down the money.
That's
And
right.
then when they've spent down the money at a nice facility, they go to a state-run facility. But I will say this, I have to say this because of the situation with my mom, Chris.
Mhm.
I know this is your show, but I'm doing the co-host is doing the talking now, Chris. You just relax. Uh, but my mom's situation is she is in a state-run facility, but in her instance, it's in a small rural area. It is one of the highest rated facilities in the state. It is
Oh,
great care. It is great care.
that's awesome.
Unfortunately, that is not always the case. We are very fortunate that she lived 20 minutes away, about 20. Their town is 20 miles away from this even smaller town that has this facility, and it is exceptional. And
Nice.
she gets great care there, and and she likes it, actually. I mean, there's things she doesn't like.
Sure.
Nobody's going to love long-term care, but it is next to in-home care. This is the next best thing, and my dad
Right.
couldn't take care of her, and to get a full-time person to come out in the country just in their area, the home care wasn't we couldn't find a viable option for her. So plus she needs round the clock and help going to the bathroom and medication, and it would be 24/7, and my dad can't do it. So because
Right.
he's also somewhat disabled, but and he's 80 years old now. But
Yeah.
this facility, we're fortunate. My point here is, unfortunately, the facilities that do accept Medicaid are not always the best, and you don't get the greatest care. So
Right.
that's the problem there as well.
So do you have some long-term care that is helping with some of that? Some long-term care
Yes.
insurance?
Yes, she did have some insurance. It's helping with a little bit of it, not a lot of it.
Right.
She didn't have the big expensive long-term care insurance that's, just straight long-term care insurance that's covering everything. But
Right.
she has a couple of different policies that pitch in, a few hundred here, a few hundred there.
Right.
But she's actually now on Medicaid.
Okay.
So, but they don't pay for, it's not like she doesn't need that insurance then, because they take, what she can pay and what they can pay, and then
Yep.
the Medicaid pays the rest. And I'll tell you what, the county and the state who administer it here have been great. I mean, I can't complain about that. I know I've
Oh, that's
heard horror
awesome.
stories from other states and facilities, but we've had a very good experience, and I can't
Right.
say enough about it. So that's helpful. But you want to do due diligence. You want to look at these places' rankings, and if
Oh,
we
yeah.
have a loved one going into long-term care, but there are options out there to cover long-term care, and I think it's important to work with somebody like yourself, right?
Yeah, it's important to get some educated on what your options are to
Yeah.
understand, do you want, traditional long-term care insurance or something else that's more of a hybrid? And that's what we will help people make decisions upon, because traditional long-term care insurance that my mother has some, it's just like, home and auto insurance. You pay regular premiums, the premiums, if you have a really old policy, some of the premiums are fixed, but all the newer policies are not fixed. And so they may go up year to year. And then um, it d- depends what it covers, right? It can cover lots of various things. So you got to look at those policies very carefully. The other part is when you have to submit a claim to see if the services are covered. And so, and then some of the policies make you pay out of your own money to cover the service, and then they reimburse you, which is a challenge, right? If you're in that kind of setup, is how do you come up with the money to pay for a $7,000 to $12,000 bill every month, um, and then you have to submit. Oh, you got the
Yeah.
bill. I show that it's paid. I submit the
Yep.
claim. Okay, wait. This person's in memory care. How does that work?
Yeah.
They can't take care of that.
No.
So there's some challenges with the way some of those policies are that they need management. So the kids end up helping, doing all those kind of things. So it's still, as you still have to be involved in it. You can't just stick your parents in a nursing home, or you can't just go in a nursing home and expect them to take care of everything for you. You need some
Yeah.
outside help,
Good point.
even if you're in that facility. And so you need somebody that's looking out for you. And if
Yeah.
you don't have any family members left, there are some some lawyers and guardians that can help with that. But that's a
Sure.
whole different thing. Um, the other challenge with this is the inflation of medical costs,
Oh,
and the care is astronomical. So if you look at the cost of just healthcare insurance in 2000, it was $1,000 a year for a family of four, and then in 2020, it was $20,000. So
oh,
that's 20 times an increase. So these companies, there's a lot of companies that have gone out of business or stopped offering them because of the cost of healthcare, and they can't help provide that anymore. So you got to make sure, if you do have a policy, make sure it's the right one for you, and you want to have somebody look at it with you that can read through the legal verbiage.
sure.
So that's one of the things that we help people with.
Well, and just the straight long-term care policies are kind of a thing of the past anyway, right? I mean, a lot
They
of
are.
companies won't offer just a long-term care policy. So there are a lot of new options, right? Hybrid policies, things like that. There are, if somebody has, I know, really popular retirement vehicle right now is a fixed index annuity. If you have that, you
Yeah,
can add a long-term care rider on that, or
that's right.
policy that's just for a little extra fee. You can add a long-term care rider, which if you happen to go into long-term care and you have this annuity, it'll kick up the monthly payments by a certain amount to help cover it, right?
That's right. So, annuities have long-term care riders. Whole life insurance policies have long-term care riders, and so now we're talking about the hybrid type of things. And so, the good thing about annuities is there's less due diligence by the company that's going to provide the annuity for you, in qualifying you for that annuity and qualifying you for that rider. They're not going to look at your mortality, right, or your morbidity stuff. So long-term care, they look at morbidity. Whole life insurance looks at mortality. Annuity looks at, do you have the money? So, so it's an easier hurdle to get to it with the annuity versus the other two. But
Yeah,
mortality is easier hurdle than morbidity. So I'm throwing around big words. Basically,
sure.
if they think you're going to die soon, then they don't want to insure you, right?
Right.
For
That's the
whole
bottom
life
line there.
policy.
Yeah.
Long-term care is, if you're going to go into long-term care really soon, then they don't want to insure you. So that is a more likely occurrence than you passing away soon. So it's easier to get whole life insurance and with a long-term care rider than it is to get long-term care qualification.
Of course. Yeah.
So,
Yeah. I mean, companies were starting to go, they were losing a lot of money on long-term care policies because of the
oh,
cost
oh
and
yeah,
so many people needing it. I mean, it's just like if 2 out of 3 people are going to need long-term care, it's
right,
hard to insure for it. Right. I mean,
right.
you have to come up with other solutions.
It, so
And
the hybrid policies, they shift some of the risk back to the individual. and so that's why they're becoming more popular with
Sure.
with everybody. The risk comes back to you because you have to put enough money into it so that you can pull enough money out for that long-term care. Um,
Right.
so
Right.
so
It's almost like a forced savings in one sense then.
yeah,
Yeah.
and the risk for the long-term care insurer is really high, as you noted. So that's why they're kind of going the way of the dodo.
Yeah. Yeah. Yeah, it's a tough situation, but I think the first step is to work with somebody like yourself to get a plan in place that takes into account healthcare costs and possible long-term care needs. So, that
Yeah,
said, let's take a break here and let our
sure.
listeners know how they can get a hold of you and set up that complimentary consultation.
Yeah, so if you wanna talk to us, you wanna talk about long-term care, call us at 719-210-4242. Give us a call. We'll set up a complimentary consultation, and we'll get down to brass tacks about, long-term care and getting your homework done.
Yes, exactly. Get that homework done. Yeah. I mean, and I guess a place to start for planning for long-term care when you sit down with people is to look at your overall financial picture. I mean,
That's right.
and really look at the overall financial plan, what your other needs are, what your and time comes into this too, what your time horizon is.
The time horizon, um, your personal health, what's your family situation.
Sure.
Um, there's a lot of factors, so nobody gets the same kind of coverage. Everybody kind of personalizes it to yourself, and that's one of the reasons you really need to sit down with somebody that is smart about both Medicare and long-term care, and to get the right things in place so that you have security in retirement. The worst
Yeah.
thing that can really it's like your mom went into facility and your dad's not. Well, he doesn't want to have to live like a pauper his whole life, maybe,
Right.
but he's 80, so he's not doing a lot of things that eat up a lot of money. But what if there's a big age difference between the spouse and the other person, or somebody has an
Yeah.
early onset or something? So they have a lot of living to do. They will still want to travel and see things, go see a volcano erupt in Hawaii. They want to go do this or that, the things they haven't gotten to do because now they're just retired. And so you want to have that plan so that that we don't deteriorate both lives if one person has to go into a facility. And so
Yeah.
that's what we kind of help people do. Now, if you're single, then we help you plan for that too. Everybody's got their own individual needs, and so that needs to be taken into account.
Sure. Well, and the reason this is such a problem for some people, you mentioned timing and looking at family history,
Yep.
and let's address that because the good news is we're living longer. The bad news is we're all living longer,
We're living
right?
longer.
Yeah, the
That's
bad
right.
news is we're living longer. You wouldn't think that would ever be bad news, and when you're younger, you think, "I wanna live as long as possible," right? And as you get older, you see the problems with living longer, and
Oh,
I
yeah.
happen to have longevity in my family. Now, that's why I eat so much pizza and eat the way I do. People say,
Because they did.
why don't you exercise and eat better?" I'm like, because I see all my relatives living to 100, and I have no way to fund that kind of lifestyle. Uh, I'm joking, and I don't want to be morbid or crass, but it is true. I do have a lot of longevity in my family. I mean, my dad is 80; he still drives, etc. His dad
Oh,
lived to
that's
100.
great.
His dad lives to 101. Now, should my dad be driving? That's another discussion. We're not going to talk
Yeah.
about that right now. But he drives, he works out on the farm. He shouldn't do any of those things, but he does. He goes into town every morning for coffee, lives alone on a big farm, and he's 80. But my grandfather lived to 101. Many of my relatives on my dad's side lived to 100 or beyond. And my mom her family, they lived at least until their 80s, all of them. So um, it's interesting. You look at that and you think, wow, odds. I mean, it's like the odds are stacked against me. I'm probably going to need term care, right? So, and I'm going to live longer. How do you plan for that? And you can't do it on your own. I mean, if you're going to have a long life or you have longevity in your family, get a financial advisor yesterday, right?
That's right, because
Yeah,
you don't want to outlive your money and then
right,
end up having to sell your long-term home and move into an apartment.
right.
That's happening for people.
Yeah, it is when they don't want to. Now, my wife and I
Yeah.
want to downsize. We don't want the responsibility of a yard. We're excited at some point to get out of our home. But, and now, as of last week, we're empty nesters. So our youngest is off
Oh,
to college at least. I mean, they'll be
wow.
coming home in the summers, but yeah. Yeah, Anna's in college, so all three of our kids are out of the house. We are, as of today, actually, as of this recording, this is our first day as empty nesters.
Oh, wow.
That's why I've
You're
got
gonna
an
have
extra
to,
bounce in my step, thinking about knocking out that bedroom wall and turning it into a game room or something.
you're gonna
I,
you're gonna have to plan for a little celebration tonight, a
yeah,
nice
oh yeah,
meal, a dessert,
yeah,
something
yeah.
something to,
We can't
have
afford a
at the end of the day.
celebration. We have 3 kids in college. That's the
Oh
problem.
my.
That's the problem. That's why I need to. I'll talk to you off air about getting some extra money. Hit my financial advisor up. But
He's right.
but long-term care, people don't
Yeah,
like to think about it. They don't like to think about
yeah,
getting older or, what happens if one spouse passes or needs long-term care and then you need long-term care. They're just like, oh, we'll take care of each other or we'll get in-home care. And it just, from experience, it doesn't always work out that way.
yeah,
And but it's not going to work out at all if you don't have a plan in place.
right.
You're going to run into a lot of problems and headaches that could be avoided. Trust me when I say that. With my grandfather, I've had relatives in hospice and in long-term care, and you need to plan, and you need somebody who's going to look at the big picture, though.
That's right. Well,
Yeah.
and Gen Xers and millennials aren't interested in taking care of sick people.
No, no. I mean, they've got their own things to figure out at this point, and
That's
there's a
right.
lot of problems in the world that they're looking at. And you look at those problems when you're young. You don't look at, I think I'll take care of, and different cultures are better at this or worse, but especially here in
Yeah,
America, young people aren't going, yeah, let's take care of grandma. Let's let her move in with my new wife and we just got married.
yeah.
We're Gen Zers or millennials, and we're gonna have our parents live with us, and
Well,
we're gonna take care of them. That's not gonna happen.
right, and maybe they have babies in the house, and now
Yeah,
you're gonna try to take care of somebody with memory problems.
yeah, no, that's not gonna work.
Not gonna work.
No, so you have to have a plan.
Yep.
We're out of time. Let our
Oh, wow.
listeners know how they can get a hold of you.
So they can reach us at our office, 719-210-4242. Give us a call at that number and we'll set up a complimentary consultation at your earliest convenience. So that number is 719-210-4242. Go check out our website, nolanfinancialpartners.com. You can listen to our past radio shows from there. And you can also subscribe to our podcast. So you can listen to some of these old radio programs.
Awesome. Sounds great. And that does it for today's episode of Nolan Financial Radio with our host, Chris McKinney.
Join us again soon for another episode of Nolan Financial Radio.